In this video, we're going to look at the impact of the CPI report. More importantly, we're going to look at where things could go from here. Stay tuned, it's going to be fantastic. Let's run the numbers. When we look at the forecast for core CPI, CPI month on month, and CPI year on year, we can see that the actual results all came in under the forecasted results. This was fantastic for the market. We look at the markets very specifically through the lens of the Tier 1, Tier 2, and Tier 3 charts. In order to explain price behavior like this and price behavior like this, if you turn to social media at literally any day, people say, what the heck happened to Bitcoin? Or what the heck happened to Tesla? Or what happened to Doge? Or whatever it is. What happened to gold? And they tend to miss the larger picture that we operate inside a financial ecosystem where we have Tier 1, Tier 2, and Tier 3 charts. The Tier 1 charts are the engine of financial markets globally. The Tier 2 and Tier 3 cross-confirm movements in the Tier 1, so we're always focused on the Tier 1s. In this video, I'm going to give you some insight into how to look into the Tier 1s, and I'm going to be really specific about the CPI price action. This is incredibly valuable information, and you won't find it anywhere else. What happened in the last 24 hours? The CPI print came out, and as you saw, the estimates were overstating the actuals. So we had this rally, but then we had a dump. We can explain this, but how do you explain that? The answer is CTKS structure. And I'm just going to pop on the indicator here to give you an understanding of what Greg is talking about at fishing at structural support levels. Without an understanding of structural support levels, it gets really difficult to understand why price is doing what it's doing. We can see back here on around the 4th that total crypto market cap came up to this $2.56 trillion mark of structural resistance, but it couldn't convert it in. It couldn't continue up towards higher levels. As a result, if it's not going above, if it cannot confirm and move forcefully above that structural support level, it's going to the one below. And if it doesn't just ping it back at all, and there are negative fresh air gaps below, it can cause really chaotic price action. You can see how price just cratered here. It needed to be caught by these structural levels. Now, these structural levels are not like recent indicative price. They're drawn across all of price history with 2 levels of standard certification required to draw them. And you can see here, just under this $2.47 trillion mark, we couldn't hold this one as well. And then we dropped down to lower levels here. And this is where price got caught right across the alts. And this is what Greg was talking about, doing his fishing at support levels. It was very good news what happened with the CPI, but it can't overcome. Price action will always be contained by structural levels. We had a lot of structural resistance up here. Now what happened? We got that explosion through a positive fresh air gap, came up, couldn't reconfirm as support. It couldn't flip the resistance into support. And what happened? It decayed, and it decayed down. And this is putting these lower structural plays into existence at the current time. One thing that I want you to be really aware of, we are in a presidential cycle, and when we look at where price action is going, it's really matching the presidential cycle very, very well, which would have us going up till at least January 25 if this average price action holds. And this analysis is from Fidelity. When it comes to after January 2025, the markets seem to flatten out. But we're looking at some really good price action between here and there, so don't be shaken out of your positions. If you're inside the stock market, as the CPI data came out, you would have seen an explosive rally up to 54.41, which was a structural resistance level. And this is drawn through all of price history, literally across more than 55,000 days worth of data. And we didn't hold it. But a lot of people, because they don't know where the structural levels are, they don't have that X-ray vision inside the market. They just think if it's going up, it's going to continue to go up forever. And if it's coming down, it's going to come down forever as well. This is not actually the case. Price is always moving between structural support and structural resistance levels. That's it. You can imagine looking at a chart like this and saying, where is the structural support and where is the structural resistance levels? Well, in order to understand that, let's just pop on the indicator. It's really simple. By putting on the indicator, what we can see is where the actual structure is. We know that Bitcoin is literally an alt of the stock market, and it came up to the 70,053 level after the CPI and FOMC meeting, and it just couldn't hold it, but I'll explain why it came up so quickly. It had a positive fresh air gap. A negative fresh air gap will make price go down very quickly until it finds strong or substantial structural support, and it needs quite a few of them to go through a negative fresh air gap. It will tend to overshoot them, and this is fine. This is just how price works. But if we get positive momentum inside the market, it will seek to retrace up to a structural resistance level. And you saw with the SP500, that structure was hit and could not be maintained. That put negative price momentum on Bitcoin, and negative price momentum on Bitcoin crushes the alts. When you understand the intercorrelation and interdependence between the Tier 1, Tier 2, and Tier 3 charts, you can do what TSP did. TSP said, on the weekend, he was at a function and a young man there in the city was in financial markets. We had a discussion about the financial markets and he was really impressed with my knowledge for someone with no formal training except for the masterclass. My goal is to get you to this position where you could talk literally to a board member of a large financial services firm and meet them head on. In other words, you would have substantial knowledge, and many masterclass graduates are at that level right now. The goal of our community is to help you to become more of a financial and emotional blessing to yourself and those you love. And you do that by knowing where the structure is. And just think back to when the markets were coming down like this. How were you feeling? A lot of people would be feeling dread and disgust and a lot of disappointment, even guilt and shame, and all sorts of things like that. And how are you feeling when the markets went up? Euphoric? Fantastic, like you had it all nailed? You don't want to feel like either of those things. You just want to know where the structure is and you want to trust the structure. You'll see it play out year after year after year, and we've been showing it literally year after year after year. I'd like to say thank you to Chris, who put this in yesterday's video. You're the only guy I listen to when it comes to crypto. You have more experience than all the Moon Boys combined. Thank you, my friend. It's very kind of you. We have such an incredible global family each and every day. It's just an honor to be here for you and to help you through this and help you understand how the markets actually work. And a very big thank you to LGRC01. He said, I've learned more from you than I learned in the 23 years of school. Oh, that's just beautiful. I'd like to help you to understand why the markets went up and then they came down. And looking at the euro can be really, really good. The euro is the inverted price behavior of the DXY. So if the euro's going up, we expect the DXY to be coming down. Now, what's really important here are the structural levels. So let's just pop on the indicator. A lot of people think that there's only one level of resistance or support that truly matters. That's not the case. Financial charts are a lot like geological rock formations. They've got numerous levels of overhead resistance and numerous levels of underneath structural support. And when we look at the euro, it's been marked up for 19,000 days worth of data. These structural levels are really important. Now, what happened with the SP 500? Because of the yields and the great and better, way better than expected CPI report, everything just rallied, which means the yields just dumped down and bond prices rallied. And of course, the DXY dumped and also the euro just exploded. But where did it explode to? You got it, to structural resistance levels. Could it confirm that structure as support? In other words, could it flip it? The answer is it was a failure. It couldn't flip it. It couldn't flip this one and it couldn't flip this one. That meant it was going down to these lower levels. Even these lower levels here are now in play. But you can see one thing, the euro is really trying to get back to this 108,400 level. Kate and I appreciate you so very much for joining us each and every day that we do videos. I'd like to say a very big thank you to Gayatri Home Ashram. It's just such a beautiful comment, and Kate and I, it's true what this comment says. Everything that we do comes from a place of love. We really want you to be successful. I find personally when people reach out to me and say, oh Ken, I've done this or I've done that, and they're successful, I am ecstatically happy for them, and so is Kate. If you would like to be part of our amazing, amazing global family, please just subscribe and you can reach out and say hi. We can see ETH doing a very similar thing. Let's turn on structure and so we can interpret this. You can see that ETH came up to this 3650 structural resistance and couldn't confirm it. In fact, it just wicked into it. It couldn't even get the candle bodies into this area, which meant it was really weak. When you have a big candle like this, often they tend to reverse. But what you need to do is just to look at structure. At the moment, at the current time, Ethereum has not held onto its 3570 level, which puts in play the 3484 levels. So if you're aware of this, these are like safety nets that capture price. Don't forget that things can change around very quickly so long as we get an upwards movement. We're heading towards the next structural levels. Always think in terms of 3 dimensions. Yes, it can go down, it can consolidate, or it can go up. There was a degree of consolidation here, and then there was this upward price momentum on the CPI report. But overall, the markets are looking really good. You should not be too concerned. This is just an ideal time to stack those bags up. A big thank you to Port Power 888. Just a beautiful comment. As a global family, we've created this wonderful group of like-minded people. I believe we literally have the best community on YouTube. Thank you, my friend, for such a beautiful share. We can see that BNB was coming down, turned around and went up on the CPI. And we've been noticed it's been coming down. So let's just pop on the structural levels and see what's cooking. The beautiful thing, each chart has its own personality. Each chart has different structural support and structural resistance levels. And we can see here at that 633 mark, BNB simply couldn't overcome its structural resistance and it's come down. That was an important level at that 624. It didn't hold on to that, but it was captured by these safety nets and rebounded. But it's got negative price momentum on it at the current time. Don't be at all concerned about the fluctuations between price. Price is always just moving between structural levels. That's all price does. If you want to get confidence inside the market, all you need to know is where the structural levels are and how to interpret price in between them. Ripple had some fantastic news. It's introduced Ripple USD. It wanted to call it Real USD. And maybe it is, but you know, maybe this is going to cause a little bit of a contestability issue with the US federal government. I think they want the title of the real fake USD. After all, it's called fiat, which means fake money. Okay, let's look at XRP. XRP rallied with everything else, but look at this, it came down. What is the structure playing out here? Let's just pop on the indicator. And this indicator, this structure is built over 3,700 days worth of data. What's important is to know how to interpret this. And we can see already, look at that. When it came up to the 49.79 mark, it just cratered. And we saw this play out across the entire financial ecosystem. Even with this very good news, you will find often it's not news that drives price. Well, it is to a degree, but it's the structure that overrides the news. If that wasn't the case, you would see very different behavior in Ripple's price chart. A big thank you to Kirk from San Diego for your terrific comment. The CTKS cheat sheet is great. It keeps me focused on the charts and not the stories. It helps me to stay organized in my daily due diligence. If you were looking at Solana, and let's just pop the indicator on straight away, you can see that we had that CPI spike up, which was unmaintainable as the SP 500 just hit structural resistance and started to decay. And you might say, Ken, what has Solana's price got to do with the SP 500? You can think that Solana is an alt to Bitcoin. Bitcoin is an alt to the stock market. And that's exactly why Bitcoin cannot escape the stock market's gravity. Okay, what are we seeing here? We're seeing in terms of Solana, this 157 wasn't confirmed as support. Now, how do I know that? We had this big push up and this retracement. It was seeking to get above these intermediate levels, but it was failing. It created lower highs in the process. A bit of a spike up, potential intention spike, and lower highs here. Couldn't hold the 157 level. That opens up the 150 and the 147 levels on Solana. But don't forget where we are in the cycle. This is all an absolute gift. Let's have a look quickly at the DXY. When the CPI figures came out, we already saw that the DXY was under structural resistance. I've just drawn what are called SC or Stanfield zones. These identify structural levels in groups, and you learn all about this in Level 2 standard certification. So we can see that we were under resistance and we just couldn't confirm it. We couldn't break it to the upside and confirm that as support. That meant we were coming down to lower levels. The fact that the CPI data came in much lower than anticipated caused the DXY to fall off a cliff, literally through a negative fresh air gap, but it got caught by structural support. And structural support does this all the time. You can see it's flung it back, just like this. So we have a lot of structural overhead resistance, so it's going to be hard for the DXY to get through this particular band. We do have structural support underneath. So if we see the DXY starting to make its way up to that 104,900 mark, that just indicates that there is a lot of structural overhead in between these two levels that will actually just take the crypto market and the stock market down a peg or two. But if we start to see the DXY coming back to the 104,200 mark, this is fantastic for crypto and for the stock market as well. So it really depends what the DXY is doing at the current time. In a way, you could think about this as just a pure retracement. It's just like a Fibonacci retracement. It's retraced this move about 50%, and now it's trying to figure out, do we have the strength to go up or the strength to go down? Or could potentially be the weakness to go down. To stack probabilities, we look really broadly, and you know that dollar yen is an important one to look at. You can see this structural level didn't hold. We had that slicing through of these structural levels, but these structural levels act as magnets. Even if it comes down, all the charts are intercorrelated and interdependent. You can see that dollar yen is having an enormous amount of trouble getting through this overhead structure. So if we start to see dollar yen trading at about 157 plus, we know that the DXY will be coming up. If it starts to trade down to that 156,600 and below, we can tell that the euro is going up, the stock market is going up, crypto is going up, and all the alts will be going up because we've got a negative fresh air gap here, and it could plummet very, very quickly back to that 156,100 level. Financial markets are really complex and complicated, but they're fascinating as well. When you learn how to track price movements, that's actually what I'm giving you the capability to do. You can make literally an unlimited amount of money from financial markets. And the thing is, you don't take that money from other people. You take it from the market. Markets collect money, and if you know what you're doing, you will collect that money. If you don't know what you're doing, you will pay the market. You don't win and another person loses. This is a myth that's perpetuated by a certain kind of person. It's literally the competitive mindset. The competitive mindset could not ever comprehend that somebody can win and somebody else can win at the same time. That's not how we work inside the CTKS global family. We're all about understanding and learning. You are paid directly in proportion to your knowledge and emotional mastery. And it requires both. Because, on the red days, how do you feel? You feel like, oh my goodness, this thing is horrible. I don't want to get out of bed. It's terrible. And often on the green days, people say, oh, I can't. I've never felt better. You don't want to do either. You just want to look at your structural levels and understand what's going on. In other words, you want to move away from the retail mindset that gets really euphoric as prices rise, because the retail mindset says to you, if you're thinking from that perspective, I can only make money if the market is going up. Well, you should be able to make money as the markets are coming down. That is also possible by going long at spot, not actually using leverage. And if you're using leverage, it's good to be a master of spot first before you do that, because leverage can definitely multiply your returns. But if things move against you, oh boy, you can get wiped out. And that getting wiped out is definitely a very disconcerting feeling. But just remember, we're in a market which is headed up. The US presidential election cycle is looking really good. We anticipate higher and higher prices, at least to the start of next year. If you like this content, please smash that like button. And if you're not a member of our global family, please subscribe. We'd love to have you here. And just for our veterans of the CTKS method, please let me know, how do you find reading the structure of a chart? And what advice could you give to new people who are just starting their journey in the CTKS method? I'd love to share your comments in the next videos. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.